Can you buy a house with bad credit? Stay tuned to find out. Hey everyone, Andrew here with the Lake Team in Houston, Texas. Welcome back to our channel. We have another fantastic video for you guys today. If you're watching this on YouTube, go ahead and smash that subscribe button down below. We do our best to produce the best real estate content for you guys each and every single week. And with that being said, let's go ahead and move into today's topic, which is, can you buy a house with bad, terrible credit? So the short answer is no, you can't. The longer answer is yes, you can. Man, what I mean by that is no, you cannot get a traditional mortgage if you have bad credit. If you have bad credit, let's say it's 580, 570 or below, whatever the going rate is nowadays. I think it's about 580 is the minimum you can qualify for. But not getting into DTI issues or anything like that, which is debt to income, you can't qualify. Like you're below that threshold, and if you're at a 5.8 or 570, 560, you can't qualify for a traditional mortgage like conventional FHA, VA loans, USDA loans. But you can, however, you can, however, go with a non-QM mortgage, which is a non-qualified mortgage. Right? There's a difference. You have qualified mortgage, which is the loan types I just mentioned. And then you have loan products with different lenders that have non-QM products, right? Non-QM mortgages. Some of those products could be bank statement loans, right? Some lenders just require 1 month or 2 months of bank statements. Another one would be a asset-based loan. You know, that instead of looking at your credit score, they're going to look at your assets. Maybe you have a ton of investment somewhere. You have money market investments, or whatever the case is. You have an asset that you can basically, I guess, put a collateral, so to speak, right? And then you have jumbo loans. So a jumbo loan may not be necessarily for people who are trying to get. It's not for people trying to get into a first-time home buyers, right? It's more so of someone who's trying to buy a house that's not a conventional loans on a major house. There's a certain threshold. Let's say it's like $510,000 with the minimum percent down. Anything above that, you'd have to put 20% down. That's what a jumbo loan is. For the non-QM jumbo loan, it's 5% down. So then at that point, if you're only doing 5% down, you do have a non-QM. However, all of these non-QM mortgages that I'm mentioning right now, all these products, you're gonna have a higher interest rate, right? And I believe on your bank statements too, they're gonna want 20 to 25% down. So whatever the purchase price of the house is, you're gonna have 20 to 25% down as your down payment. So it's pretty difficult. I mean, if you could do it, more power to you, but it is kind of difficult to go that route. Not very many people could put 25% down on a house, especially when you're buying one for the first time. So what do you do if you did apply for a house and your lender, you got denied? The lender denied you through the underwriting system, right? Whether you have bad credit, you have a high debt to income ratio. So what I would suggest to you guys is if you did get denied, the lender's going to tell you why. And if the reason why is your credit scores are low, maybe you don't have established credit history, or maybe you have some things that need to get removed off your credit report, right, to raise your credit score. So all these things you need to take into account and then seriously consider on working on. So if you need to save up more money because it's a DTI issue, if you need to go ahead and go to the credit repair route, right, you're gonna get with the credit repair person that can help get some derogatory statements removed off of your report. That may be the route to go. Or maybe you need to pay down some debt. Maybe you're right there, like your credit score is in the qualifying stage, but maybe you just have too much debt in order to get the house that you want. Maybe it's as little as just paying down $3,000 or $5,000 of credit card debt, or maybe it's as severe as paying down $120,000 student loan debt. Whatever the case is, your lender should be able to let you know a good solid plan moving forward on how to get your credit score raised and how to get you in the qualifying stages. Just to reiterate, you do have loan options if you do have bad credit, you do have bad DTI issues or whatever the case is, but you can't go the qualified traditional route. You do have options. You can go the non-qualified mortgage route. Just understand there's pros and cons of all of them, right? You get bank statement loans, you might have to do 20% down depending on the lender and their product that they have. You can do asset program or asset products where you're going to have to put up some assets as collateral. to secure a loan. So there are options out there, and then keep in mind these non-QM mortgages, your interest rates are going to be higher. So you do have options. So don't totally just disregard the fact that you can't buy a house because you got denied. You just need to weigh your pros and cons of each, right? So if going the bank statement route makes sense, then go for it. But if it's a heck of a lot easier to just maybe pay down a little bit more debt, work on some of your credit issues, maybe wait 3 to 6 months and then try again, you'll have a lower interest rate hopefully at that point, right? So maybe that might be better than going the bank statement route. You just need to ask yourself these kinds of questions like, okay, what's right for me and my family, or what's right for me at this moment? What do I need to do? What makes sense? I mean, do I really want to push the fact that I can't buy a house right now, so I want to go the non-QM route, pay more money and pay a higher interest rate? I don't really care. Or do you want to go the traditional route and actually work towards, taking advantage of low interest rates, taking advantage of low down payments so you can keep more money in your pocket? Those are the types of things that you need to ask yourself. I can't answer those questions for you. That's something that you need to answer and just kind of figure out. But I do feel it's part of our jobs to kind of educate you guys out there on what some of your options are, just in case you did want to, go down that road. Well, that's going to pretty much wrap it up for this video for today. Let me know what you guys think in the comment section below, or if you have any further suggestions, feel free to reach out to me. And if you have any other topics too that you'd like me to cover on, let me know and I'll be happy to make a video about it. And if you need to reach out to me, I'll leave the link in the description of the video for our website. All our information will be on there as well. And don't forget to hit that subscribe button down below. You'll be the first to get notified of any time we release a new video here on this channel. And that's pretty much going to do it for today. I'm Andrew with the Lake Team in Houston, Texas, and I will see you guys next week.